The darker view is that the excess manipulation of money blows up the entire system. And that's a lot of people hold that view, that you end up with a hyperinflation or something of that sort, a total economic collapse. But I struggle to get to that answer because in every circumstance, when asset prices collapse or something goes wrong, they just print money. And when you're the world's reserve currency, it's bloody difficult to hyperinflate it. So what you end up with is this ridiculous rise in asset prices, which then gets rid of this ability to have this massive downside. So I think we've taken the big downside away. Well, we've traded it off for something else, which is everybody's incomes basically get poorer in purchasing power over time versus assets. But I don't see... Okay, the other downside people would say, and there's validity to it as well, is that the excess use of monetary policy creates sticky inflation, and that therefore interest rates need to be higher. But I've lived through whole periods of higher interest rates and asset prices still go up. It's just the rate of change at interest rates that matter. You know, markets don't like rates going from 0 to 5.5% in record time. But even if rates stay at 5% for the next 10 years, it's not going to stop people buying technology stocks. Why? Because their ROI is much higher than 5%, so nobody cares. And most of those technology stocks don't have debt, so they have cash. And their cash on their balance sheet is going up at 5.5% a year because they're putting it into bonds. So it's this compounding effect for these companies that is so powerful, it's difficult to change. I mean, we've had extended periods of time where interest rates have been higher than 6% and markets have gone up. It's just this idea in our head. Now, it's difficult to finance the government debt because they have to keep issuing more and more and more debt to pay the interest. But I think that ends up on the balance sheet. So can they do that and still have interest rates at 5%? Yes, they can. It gets trickier, and I get that. And I think that's the point they start using yield curve control. This is what they did in the 1940s and 50s. They said, and Japan has just done, they're like, okay, well, we're just not going to allow interest rates to rise. And we're just going to peg the yield curve, which is another form of monetary debasement and another form of QE. As opposed to QE, which is buy bonds at any price, buy X number of bonds at any price, yield curve control is buy all bonds at a fixed price. We saw over the 50s and 60s, we saw 9x upside in the S&P. Same reason. You're kind of printing money, and what happened is debt to GDP went down over time because productivity picked up, because we had a big technological revolution back in the 50s. You know, everybody started getting houses, cars, TVs, telephones, all of that stuff. And that kind of changed the economic structure.
Hey, Money Talkers. Today we're diving deep into the drama between the SEC, BlackRock, and the future of Bitcoin. It's a regulatory roller coaster, so grab your popcorn because you're in for a wild ride. This is Money Talks, where finance meets crypto chaos. Former SEC Attorney John Reed Stark is throwing punches at crypto, predicting a crash. He says crypto's got no structure, no proven track record, and it's all just hype. But hold your horses, Stark. What about Ripple's moves or Bitcoin as a lifeline in inflation-hit countries? It's a crypto showdown, and Stark's taking a swing at shadows. Now let's talk about BlackRock, the heavyweight champion of asset management. They're filing for a Bitcoin ETF, but there's a twist. Rumor has it they've added a secret sauce, a regulatory kill switch. What's the SEC's role in this drama? Will they classify Bitcoin as a security? It's a chess game, and BlackRock's making strategic moves. But is it a Trojan horse or just legal caution? The crypto community is in a heated debate over Bitcoin's SEC status. BlackRock's filing has ignited the discussion. Is Bitcoin a security or not? Crypto leaders clash in a battle of perspectives. Some say Bitcoin's unique, decentralized nature exempts it, while others compare its code to books, suggesting usage decides its fate. It's a game of regulatory roulette, and the stakes are high. And there you have it, crypto mavericks. The SEC, BlackRock, and Bitcoin are locked in a regulatory tango. Let's continue our discussion with Raoul.
once I started putting together this kind of super thesis of the everything code and the exponential age, I started to look at all assets versus each other to say, if you're going to take risk, where do you take it? And everything was inferior to crypto. And I'm like, it becomes very difficult. If you look at it, the best performing asset for 3 years out of 4, every single year since 2009 has been crypto. And then there's 1 year, which is a bad down year, and then it continues. And the down year, it's the worst performing asset. But over time, it's compounded higher than any single asset class we've ever seen in history. So if that's the case, every other trade-off is suboptimal. Now, I can take that risk because I have income and I've got, assets. So I can take big risk because I think this is the biggest macro setup of all time. So I'll take that risk. But for other people, you can express some of these views without taking as much risk. If you believe in the debasement of currency, yes, you can use gold, but gold hasn't offset it very well. Yes, you could be cyclical and trade commodities. There'll be, as soon as we start going to macro summer, commodity prices will rise. You can make money from that. You can make money from, buying banks at the bottom of the cycle. You can make money lots of ways. It depends what your objective is. And how it came to me is it just became the big macro view and therefore the big macro bet. And a lot of people you and I know all came to the same conclusion. We've seen it, Dan Tapiero, Dan Moorhead, Mark Yusko, all of these people, one after the other. A lot of them all were GMI people. We all found about it. We all went through this journey together back in 2012. People have just realized it is the megatrend. Now, again, it's not for everybody. You have to deal with some huge ups and downs. But, there are ways of playing it in the equity market, stuff like Coinbase, stuff like that. Or otherwise, I just think you're going to be underperforming the debasement of currency. So the standard, I'm going to stick my money in the S&P 500 ETF, you're just not going to get anywhere. That house price is still going to go up, and you're just not going to make it any excess returns. And that it's a really serious situation. People don't want to understand it. They don't like this narrative. They don't like to be told that, most assets aren't worth investing anymore, but it's true. And just look at the price action. And even if you take crypto out because you're not a crypto person, just divide any asset by the NASDAQ. Just crush them all. And then people say, well, it's going to mean revert. I'm like, what is going to stop this technological revolution accelerating? If you can find me a reason that this stops, as opposed to the business cycle, rates go up, blah, 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 it comes down. I can't find reasons. Just when you throw AI, robotics, gene editing, space, EV, it's like a massive structural change. So I don't see many examples. If you listen to Stan Druckenmiller, he's long NVIDIA, he gets it. It's like, what's going to stop this? What's going to stop Google going up? Even if they destroy their business model of advertising, they still have a lot of the technology bets. People thought Meta were dead because they had a big sell-off in the bear market last year. I don't know, 300% this year. It's very hard to keep down technological advance, particularly when it's in monopolistic powers like these large tech firms.
Yeah.
Because all they do is they buy anybody who threatens them.
A U.S. federal judge has endorsed the plea deal agreed upon between the U.S. government and Changpeng Zhao, the founder of Binance, widely known as CZs. Judge Richard Jones approved the plea in a recent court document, setting the sentencing for February 2024. A U.S. lawmaker has slammed the Securities and Exchange Commission, SEC, for having a deliberate policy preference to provide less clarity to the crypto market. The SEC is not adhering to the law. That's why it keeps losing in court, said Congressman Tom Emmer as he questioned SEC Chair Gary Gensler's personal agenda. DMG Blockchain Solutions, a Bitcoin miner and cryptocurrency technology company, announced that the firm has purchased 4,550 T21 Amuner Bitcoin miners from Bitmain Technologies. DMG detailed that it paid $12.1 million for the next-generation application-specific integrated circuit, ASIC, miners, which equates to $14 per terahash a second T/S. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.